We think we've been selective and successful in finding assets that met those criteria, but also really were actionable and are things that we can see that we can build into a business, maybe smaller initially at first, but that can grow and expand and have a long life and deliver long-term positive returns to shareholders.
Hello viewers and welcome to Assay TV. In this feature, we're introducing Silvercorp Metals, who are a stable and profitable silver producing company, indicating a clear strategy for growth. And I'm pleased to connect with Lon Shaver, who's president of the company. Lon's 25 years of capital markets experience in corporate finance, analyst roles, and leading mining corporates has put us in a great position to hear a lot more about this exciting project. So Lon, welcome.
Thanks, Adam. It's a pleasure to be here.
Yeah, so why don't we start by sharing an overview of Silvercorp as a company, please?
Well, Silvercorp has a long and storied history as you pointed out, a stable and profitable silver producer. It really comes down to asset quality. The mines that we're operating are low cost, so they've been able to generate good margins and positive free cash flow over the years. And what it's allowed to do is allowed the company to build up an asset base of cash investments, other assets from this, this organic business growth and generation, not having to come to the capital markets and do financings. Also, the company has a long history of paying dividends and doing buybacks, and that's another feature that really resonates with shareholders.
Yeah, that leads nicely into my next question, because what I was going to say is, cutting to the core message here, why should investors consider owning Silvercorp shares? Maybe elaborate on some of those points that you've put out there.
Well, it is that strong cash flow generation from those assets, a strong balance sheet. So we have $200 million in US in cash and no debt as of our June 30th balance sheet. A strategy to grow, and from a valuation standpoint, we believe that we're undervalued relative to our peers and across a broad range of metrics. So from an entry standpoint, you're getting exposure to that silver production at a low cost, but also some other assets, cash, and we have a significant investment in another silver company, New Pacific Metals, which is advancing two very promising projects in Bolivia at this time.
Yeah. So what about the asset qualities then across, you're sort of a low cost operator. How are you creating these, talk about some of these financial results and cash flow that you're creating with the quality of the assets that you've got?
Yeah, well, the key consideration is producing last year 6.6 million ounces of silver. This year, anticipating growth to just over 7, and we can see a path onwards to 8 million ounces a year. And our all-in sustaining cost to produce an ounce of silver, net of our byproducts, is between sort of $9 and $9.50, depending on the time period. So at say $9.50 an ounce, that's what's generating a good margin at current silver prices, and is what is allowing us to generate that cash flow to fund growth, fund expansion at our assets, fund investments like the ones we've been making.
Yep, excellent. So making money at all points of the cycle, that's great. What about the differentiation factors? There's a range of junior mining or sort of silver producing companies out there. What differentiates you from the competition here?
Well, I think the key differentiators for us are the fact that we look for assets that have an asset quality from a technical standpoint, but then looking at them and saying, can this be built into a viable business? And rather than falling in love with what's a great looking deposit, but really just for other reasons will never get built into a profitable business and it's going to suck a lot of time and resources out of the company. We think we've been selective and successful in finding assets that met those criteria, but also really were actionable and are things that we can see that we can build into a business, maybe smaller initially at first, but that can grow and expand and have a long life and deliver, long-term positive returns to shareholders. And so that's, really what the next chapter of our growth is all about, is finding other assets that we can do that with that strong balance sheet that we have.
Excellent. Maybe before we talk about the growth part, can we just touch on sort of the advantages that you glean through China and the Chinese operation and the integration there with sort of that midstream, the processing piece as well?
Yeah, I think the advantage is if you think of the rest of the industrial world, a lot of the manufacturing capacity has been moved to China or supplies China, because that's really the engine for manufacturing. We think of ourselves really as just another Western manufacturing company that happens to be operating in China. The mines that we're operating are delivering important commodities into the Chinese market, whether that be silver that then could go into construction of solar panels exported around the world, or for domestic consumption, because that's where all the solar panels are made. Obviously, the lead and zinc are industrial metals that the world is a big consumer of, and a lot of the products that are made in China. So, we're right near where the customers are. Those are the smelters that that treat concentrates like the ones that we're producing. So we have very good relationships with the smelters, very good working capital terms, which is an advantage. And on the flip side, dealing with what mining companies need in terms of inputs, we're very close to the suppliers of those products and services, reagents, etc., capital items to build mines, to build mills. So, we're right there with a very competitive marketplace to get these things at a very good cost and high quality.
Henan Found Mining is a joint venture established by Silvercorp Metals and Henan Non-Ferrous Metals Group in August 2004. Its main activities are exploration, production, and the sale of silver, lead, zinc, and gold concentrates. Its goals are safe, efficient, environmentally friendly mining development. The company generates long-term value through its highly efficient management of 4 mines and 2 processing plants with a daily processing capacity of more than 1,000 tons and mining rights over an area of 68.6 square kilometers. The company is a major producer of lead, zinc, and silver in China. Management plays a key role in ensuring safety, environmental protection, quality, and innovative development.
Excellent. Okay, let's talk about some of the cash that you mentioned before and how you're deploying that for the growth. And you did mention New Pacific already, but could you drill down into the value of that investment?
Yeah, well, that investment is approximately 100 million, in terms of mark to market at current values, which is a multiple of what we put into it, between 2.5 and 3 times our money on that. We think, well, there have been a number of good catalysts this year in what's been a tough mining market. We anticipate these catalysts to continue. And really, this was part of identifying that there were some great assets available that New Pacific bought, and Silvercorp effectively sponsored that acquisition and has been funding the development of those assets. Really, 2 of them from discovery, one of which has announced a PEA earlier this year, that's Silver Sand, and is moving ahead into the permitting and PFS stage. And the second, Carangas, has gone from discovery to an initial resource that was just announced earlier this week, which is very exciting.
These are Bolivian assets, right?
Yes, these are 2 very significant silver, and in the case of Carangas, silver, gold, and some base metals in Bolivia.
Yep, very good. Okay, great. So from here, this point in the market cycle and this point in the year, what's Silvercorp's strategy going forward?
Well, the strategy has actually been quite consistent, which has been running through a very disciplined process of asset evaluation, looking to find assets in places where we like the technical aspects, and where I mentioned earlier, where we have the visibility on moving forward and building a mine and building a business. So that really has been quite consistent. We've targeted and designated a few key geographies, Africa, certain parts of Latin America, and Australasia as regions, districts that we've been primarily focused on. So for us to have identified in the Nyanzaga project owned by Orecorp, in Africa is entirely consistent with our strategy, which is to find a development asset that really ticks all three boxes. We like the project technically. We can see a path forward, both from a technical standpoint, construction, but also community government at all levels. The project is effectively permitted, so that's something that we're not needing to wait for. And then lastly, finding a party that on the other side that we could negotiate a deal mutually acceptable to both sides. And so with this, we have our next avenue for growth, and looking forward to building a gold mine in Tanzania.
Yeah, exciting stuff. So it seems like you need that the vision and the proof that this is an asset that's necessarily going to get built, rather than just getting hung up on the sort of geology of something. It's got to be a good asset, but it needs that trajectory, right?
Yeah. And I think that's a bit of a distinguishing factor. Some of these jurisdictions that people are designating as a safer or tier one, you can pay a premium to get an asset in that jurisdiction, but then and you never lose the asset. But if you never make progress because there's too many roadblocks for a variety of reasons, then you sort of wonder, well, what did you end up paying for in effect at the end of the day? You bought something that looks great on a PowerPoint slide, but isn't a business that you can go ahead and build.
Yep, that's fair. Maybe we can just expand a little bit on Nyanzaga in Tanzania, just what the summary of the key headlines are from the DFS, and then also your plan from here.
Yeah, well, the DFS calls for both an open pit and underground operation, producing approximately 2.5 million ounces of gold over a mine life of just under 11 years. Capital costs in the DFS approximately $475 million. We've looked at the project, and all the key factors line up with what they've announced. But we have a bit of a different approach. We think that we can defer some of the capital, and so drop that initial capital cost down by a meaningful amount, making it easier to fund and to build, and staging some of that development. And over our game plan, the mine life will be closer to 16 years and produce just under 3 million ounces, and with more of it coming from the open pit portion of the mine plan. So we're excited about getting going. We've announced the deal. We're in the progress to close that. We've made a placement into Orecorp, providing some funding to get going on some of the key gating items at the outset. So excited about closing this deal here, likely early December, and then continuing on.
Yeah, I was going to ask, did you have a date? But December, that's good.
Yeah, that's early December is the expected time frame.
Very good. And just to sort of conclude for investors who are interested in the story here and sort of your strategic development, do you have a threshold on number of targets that you want to acquire or work with? Is this enough for now, or are you looking at? You mentioned Australasia and looking around the rest of the world as well.
Well, I think the key focus here is obviously closing this transaction and being able to demonstrate to the market that we are going to deliver on building this project. But by no means do I think we're done. I think we do have capacity to look at other targets, and it would be, if you look at where we are right now in terms of geographies and amount of free cash flow, it would be nice to see a company in 3 to 5 years where you've got visibility on, say, somewhere between 3 and 5 operations, delivering 3 to 5 times the free cash flow that we currently are. Yeah. And I think that would put us in terms of, from a company standpoint, in a league and attracting a broader range of investors. That is clearly the objective here.
Yeah, because you could argue that's it's a value proposition here in terms of the valuation of the company at the moment.
Yeah, and I think that value proposition, as we demonstrate that we're moving towards that target, will begin to narrow. And so that's why now is a particularly good time to get exposure to this growth story.
Yep, Excellent. Well, Lon, thanks very much for giving us the introduction and the overview of the strategy for Silvercorp Metals. It's been really interesting to hear about that. And thanks for speaking with Assay TV.
Thanks, Adam. My pleasure.